Hey, very good day to everyone. I took a short little break from making videos to conduct my course, and now I'm back with a new topic for discussion this weekend. And today we're going to talk about CPF and what fans get wrong about our CPF system. So I'm going to talk a little bit about the CPF fan base that we have. And I think in Singapore, we've got a very solid grassroots movement like the 1M65 movement. And CPF has become very popular with Singapore citizens, along with a lot of discussions about how it works. But in my opinion, as good and as much respect I have for the founder of the 1M65 movement, I think it has also created a certain sense of fanaticism about the CPF system. So I want to create this video where I talk about my views and why I think it's better to get a more realistic view about CPF so that we can make a clearer decision about our retirement planning. In other words, what I'm trying to conclude in today's presentation is not that CPF is bad, but it is a good system. It is not perfect, right? And someone needs to talk about the reasons why in a non-subversive manner. Now, I know that a lot of opposition supporters in the past, liberals, wokes, and progressive people, they like to say a lot of bad things about the system to make people dissatisfied with it. I think I don't agree with that as well. All right, so I hope this will be informed and an educated critique. All right, about the system. Okay, so let's go. All right, the first point I want to make is that the Singapore CPF system is not the best pension system in the world, right? If you refer to the Mercer CFA Institute's global pension index, Singapore is ranked 5th in the world, which is not too bad, but is received a B grade with a score of 78.7. Okay, so this is lower than countries like Israel, Denmark, Iceland, and the Netherlands, right? Imagine, right? Singapore, a country that is obsessed with straight A's, got a B grade for CPF, okay? Now, if you look deeper into the score, you find that we did very well on governance and integrity because of our strong, stable government. We don't do so well on adequacy, and we do well, I would say, it's a B, right, for sustainability. And sustainability issues rose not because our government is bad, but because we have an aging population with a low fertility rate. Okay, and this is something that Singapore has to go through and suffer, right, beyond the CPF system. And if we allow these aging issues to actually affect our nation, it will affect the sustainability of our CPF. And I think that's something that I think everybody needs to understand, right? Okay, so the interesting thing is that if you dig into this Mercer CFA Institute Global Pension Index, the document is very cool because it actually gives suggestions on how to improve the CPF system. So one suggestion is they want barriers to be reduced to allow companies to also give retirement plans to their their loyal employees. All right, so that's very interesting. Okay, I wonder where they got that from. Okay, they also feel that CPF should be open to non-resident labor force, which means that they want CPF to support foreigners. Okay, and I think that might not go too well for some of the nationalists and the populist types in Singapore. Okay, the third suggestion, which I think would come at a very heavy political cost, is that they actually believe that the age by which CPF members can assess their funds need to be increased. Okay, in other words, you shouldn't be able to take out your CPF at the age of 55. Maybe you should postpone it to 60, and maybe CPF life should kick in at 70. Okay, because people are aging, we naturally need to have a way to actually increase these numbers for future generations of Singaporeans. Okay, something which I think a lot of people don't want to hear, and I could imagine a huge swath of our population would get very upset if this is done in the wrong way. Okay, and the fourth item, I basically agree, right? They want to show income projections on members' annual statements. I think we should go beyond using the CPF life estimator for us to figure out how much money we can get. There should be some kind of running number that we can see in our statements, all right? But because these numbers actually change based on the lifespan of the people, based on return assumptions, it's very difficult to convince a CPF board to make a commitment to the people, right? And so you come to this problem, right? You expect us to put 20% of our salary into the CPF with a certain amount that is matching, right? And we are committing it over the short term, but over the long term, you're unable to tell me how much I would get when my CPF life is ready, right? So I think that is one of the problems which I'm not sure whether it's actually solvable uh, in Singapore, right? Okay, so with that in mind and the suggestions in mind, and the Mercer CFA Institute, I think they have a lot of credibility, and they're definitely not some kind of a movement that is political or ideological in nature. All right, these are, I think, a genuine attempt to suggest how can we improve our CPF system, and so that leads to my second critique of the 1M65, the CPF fanatic kind of movement, in that if we over allocate our funds into CPF, it can raise policy risk. All right, so some policy changes are politically unattractive. So if you think that the CPF board, who are rational and good government servants who are trying to be fair to every generation, that means the boomers, the Gen X, Gen Y, and Gen Z, sustainability of the system is going to be very important, right? Which means that we have to be mentally prepared for policy risk. In other words, how would you feel if, to improve sustainability, CPF withdrawals at the age of 55 be postponed to the age of 60, right? For example, okay, that can happen. Another example is with increased lifespans, CPF life payouts drop by 10%, right? Because CPF life is designed to pay out at age 65. Most Singaporeans live until age 85. If there's a cure for cancer, all of us live until age 88. Then obviously there will be a more than 10% reduction in the payoffs, because instead of paying for 20 years, CPF life has to pay for 23 years. Okay, so you need to keep that in mind, right? And you need to understand that actuarial scientists are constantly tuning these numbers for these CPF life figures, right? And finally, what if CPF special account rates, instead of giving you 4% with a 4% floor, we take the 4% floor away and it provides a return equal to, for example, the 10-year bond yield plus 1%. Now, all this has been actually attempted before. I think the Goh Chok Tong government has spoken about it. But I think nobody wants to press the button because the political cost is too high. Okay, and of course, I want to remind everybody that the 1M65 movement was nerfed very badly by the disappearance of the special account at the age of 55. I'm not saying this against the people in the movement. I'm just saying that the main pillar of the 1M65 assumption has just been taken away, right? And that is something that is quite recent, and it's something Singaporeans need to live with, right? Because remember, we need to be fair to every generation of Singaporeans, not just the generation that is going to retire soon, like mine, Generation X, we are next to retire, right? But also Gen Y and Gen Z, okay? And finally, the biggest criticism, and this is something which I don't think can be solved, right? And I don't think there's a political group or a manifesto that can resolve this problem, is that CPF is in essence phantom wealth. What do we mean by that? The definition of phantom wealth is that this is wealth on paper, but it doesn't translate to readily available cash or sense of financial security. If you think about it, if you are retrenched today and there's no money in your bank account, you can't take out CPF in the form of an emergency. And obviously, I don't think any sane government should allow people to do that, right? You're expected to come up with savings on your own and look after yourself, right? So because of this, there is a difference between someone having a high net worth and a feeling of actual financial well-being, okay? Because these assets are illiquid, they're not easily accessible by daily expenses or emergencies, okay? To be fair to CPF, you're not alone. right? I grew up in a landed property estate, so a lot of people who live in a semi-detached house, uh, obviously in Singapore they are considered rich, right, by Singaporean standards, but because all the money in their net worth is tied into their house and there's very little money in their actual bank account, the home eventually is considered something like a piece of phantom wealth for them. As I was growing up in the estate and I walked to take a bus to work and to school, a lot of these elderly people take the bus along with me, right? Yeah, so this is not limited to just CPF, right? Okay. Do note that the special account is probably the most inaccessible because you can only get hold of it when you reach uh, 55 years of age, right? And followed by CPF MediSave account, because MediSave account, you can only use it for hospitalization, but you can get hospitalized, so that money is useful. Okay. And finally, the ordinary account is the best because you can use it for housing, you can use it for children's education. But at the end of the day, you can't use your ordinary account to buy, for example, a sandwich from Tiong Bahru Bakery. All right, you can't do that. Okay. All right. So yeah, so this is the fundamental problem, right? Phantom wealth creates a nation of extremely wealthy people who are in essence quite poor. Okay. All right. So with this discussion of CPF, I hope that I can ground CPF fanatics into a more realistic view of the system. In no way am I trying to criticize the CPF board or the hardworking people in that group. I think they have to do what's best for CPF. But I think it's good to understand uh, what consultants, and these index, the people who come up with the indices, right, like Mercer, the kind of recommendations that they give. Now, these are recommendations given in very good faith. And so if these recommendations do come true, it does affect people and their ability to take their money out to spend. All right. So please be realistic about this. So what does it mean for us? Right. I have 3 points for you. The first is we should have a balanced attitude towards CPF. Right. And the balanced attitude means that in the sense the government is right, the full retirement sum is not enough, right? I have tried using the CPF life estimator, and the full retirement sum cannot generate an income that can support a 65-year-old given the basic expenses that they need. All right. Now, but we shouldn't go into the other extreme and we allocate the enhanced retirement sum, which is about $426,000 in today's dollars. That amount is too much, right? We should go somewhere in the middle, which is 3 times our basic retirement sum, about 390,000 in your CPF special account, should be decent. All right, should be decent. So I think most of us have a long way to go. I have a long way to go. I still have about, I think, 20 something thousand, right, to get that number. Okay. Now, the second point is that CPF Life is a form of insurance. It is not an investment. It is supposed to transfer longevity risk to the state. So I'm not very happy when you read some articles on the Sunday Times saying things like CPF Life as a form of passive income, and that you can enjoy yourself when your CPF Life payments comes in, right? And the projections are always very rosy. If you're 55 today, you put in so much. At the age of 65, then you will get maybe $2,000 to $3,000 every month. All right. Do remember that when you reach 65 years old, the $2,000 to $3,000 that you're going to get is not going to be particularly fantastic because of the effects of inflation, right? Now, remember this, right? You are going to face higher medical expenses at the age of 65, right? And by then, we don't know how much our food and our utilities is going to cost, right? And so we might have to project 3% inflation. And if you were to discount it, you net present value the $2,000 to $3,000, it is going to be the equivalent at full retirement sum of about $1,001 to $1,200 today, right? So why do we want to listen to that propaganda and listen to that $3,000 when it's worth, much less in amounts today, right? So please wake up your idea, all right? Okay, and the journalist is not your friend, okay? Okay, so how do we balance out that view on CPF Life? Keep it, between 20 to 40% of your net worth, and it should replace the bond component of your portfolio, right? Amazing that there is so much literature in the US on how to do financial planning based on annuities. And this understanding of that literature doesn't come into Singapore to explain to us. All right. And finally, the last point is going to be a little bit selfish because I teach investing and I teach dividends investing. For goodness sake, pick up some investing skills. All right. If you realize this thing about CPF, then the sense of urgency to pick up some investing skills in equities, it should not be ignored, right? Reading the basics will take up maybe a few months, right? Maybe you want to go for the CFA program, you can study for 3 years, you get level 3 for your CFA, but it will take half of your lifetime to become comfortable with financial markets, to be able to understand all the subtle nuances about investing in some of your favorite companies. That takes a lifetime, all right? So try to build up these skills first so that you know that CPF, I wouldn't say is unreliable. CPF is semi-reliable, okay? But you need to also rely on yourself, okay? Personal finance is personal. Comment if you disagree with me, all right? If you like my content, you can subscribe to this channel. You can buy me a coffee at this link here. If you want to listen to my life story about how the financial independence and retire early movement works, follow the link or Google ERM intro and take the first link. I'll see you, and there'll be more exciting video content coming out over the next few weeks. Thank you very much.